Hey, welcome to this week's video. Tis the season for buying a new car before year end to save big on taxes. But what are the rules you need to know to get this right and get the biggest tax savings? What do you need to know also to have done before year end in order to take this deduction? Well, in this video, I'll walk you through these rules and what you need to do so that you can save the most on taxes from purchasing a car this year and, more importantly, stay off your accountant's naughty list. So let's get to work. Okay, so let's first talk about the SUV. Let's say that on or before December 31st, you or your corporation buys and places in service a new or used SUV or crossover vehicle that the manufacturer lists with a gross vehicle weight of more than 6,000 pounds. In this scenario, you can either elect what is called bonus depreciation, which basically you would expense 100% of that vehicle, or you can elect what's called Section 179 expensing, which allows you to expense up to a dollar limit, which was $27,000 in 2022 for this type of vehicle, and then what you would do is depreciate the remaining over the next 5 years. What's great about the weight being over 6,000 pounds is that you're not subject to what I'll talk about a little bit later in the video. It's called the luxury vehicle limits. But special bonus depreciation of 100% I mentioned is set to go down to 80% starting in 2023. So make sure you get the vehicle in 2022 if you want to take advantage of the 100% bonus depreciation. Also, stay posted as maybe Congress will decide to extend 100% bonus depreciation, but then again, maybe they decide to not. Okay, let's talk about an example. So on or before December 31st, you buy and place in service a qualifying used SUV for $50,000 for which you claim 90% business use. Your business cost then, based on the 90%, is $45,000. That means that if you elect 100% bonus depreciation, your maximum write-off would be $45,000. Not that bad. So let's talk about if you buy a new or used pickup. If you or your company buys and places in service a qualifying pickup truck, either new or used, on or before December 31st, then this newly purchased vehicle gives you 4 benefits for which you can do one or a combination of. Basically, you could expense the whole thing, but notice the rules are slightly different than my earlier example when you're buying an SUV. To qualify for the Section 179 expensing, the pickup truck must have a gross vehicle weight of 6,000 pounds or more and a cargo area, it's the bed, of at least 6 feet in interior length that is not easily accessible from the passenger compartment. So it's basically the pickup truck bed. Now, if the pickup truck fails this 6 feet of the truck bed, it's still okay because it would qualify then as an SUV because the gross vehicle weight is over 6,000 pounds. And minivans qualify also if it's over 6,000 pounds, as well as passenger vans. Okay, so let's talk about vehicles that are less than 6,000 pounds. Let's say if you or your company buys and places and services a new or used vehicle with a gross vehicle weight of less than 6,000 pounds on or before December 31st, then you or your corporation may claim bonus depreciation up to a limit, which is 8,000 in 2022. Then you can claim up to limits that are established under the Tax Cuts and Jobs Act until the vehicle is fully depreciated. In 2022, those limits are $11,200 for the first taxable year, which would then you would add in your $8,000 bonus depreciation to get you to almost $20,000 for the first year. Then it would be $18,000 in the second year, $10,008 in the third, and then $6,000 about $500 for the following years thereafter. Sometimes this limit is referred to as the luxury car tax limit, but don't let the word luxury fool you. For IRS purposes, any vehicle placed in service for business purposes that is less than 6,000 pounds is considered subject to the luxury car tax limit rules. So you need to have your newly purchased vehicle placed in service by year end. And what does placed in service really mean? Well, it means that it's placed in the use that your business and the intended use of your business. In other words, you're using it before year end in your business to do business type of activities. Why by year end? Well, this is to ensure compliance with the placed in service rule, which you can accomplish if you drive the vehicle at least one business mile on or before December 31st. In other words, you want to both own and drive the vehicle to ensure it qualifies for these big tax deductions. So some key takeaways is that it's easier to find big deductions on new or used vehicle purchases if your new or used vehicle has a gross weight of greater than 6,000 pounds. In that case, you can write off 100% of your business costs with bonus depreciation if you both buy and place in service the vehicle on or before the end of the year. If less than 6,000 pounds, you can write off a portion in the current year and depreciate the remaining over the subsequent years. But keep in mind, to use depreciation methods discussed in this video, the business use needs to be greater than 50% of the vehicle use. And don't forget to follow our recommendations and drive your new vehicle for at least one business mile before year end to ensure the vehicle is placed in service requirement is met. So that's it for this week's video. If you got any value out of it, it'd be great if you hit that thumbs up button. And if you haven't subscribed, it'd be great to have you as a subscriber. Until next time, I'll catch you on the next one.